So Simon, what are the benefits of a private equity investment versus a trade sale?
So I think the key benefit of private equity is it's significantly more flexible. So private equity can do things like minority investment, development capital. It can also agree different deals for each of the shareholders. It can invest in businesses at any point of the life cycle, and it can also invest in complex situations. Another key differentiator is private equity wants to incentivise the ongoing management team to grow the business, and it does this through allowing the managers to participate in equity at significantly reduced rates. This is referred to as sweet equity, and it can be financially very attractive.
Okay, and what areas of a business does a private equity firm focus on in particular?
So the private equity firm wants to understand whether it's a good business now and whether it could be a good business in the future. So in terms of it being a good business now, it will consider things about what's the business model, how does a business make money, what's different about the products and services offered, are the customers and suppliers solid, and is there a good management team to run it. In terms of could it be a good business in the future, we have to think about the market in which the business operates. Is the market growing? What are the competitive dynamics? And is there a real opportunity for this business to grow going forwards?
Okay, and how should a management team prepare to go through a process like that?
Well, they've got to think that the private equity fund is going to invest capital, and they want to do enough due diligence to get comfortable that it's a sensible investment. And so availability and access of information is really important here, and it tends to be more efficient if the process is intermediated with advisors helping. And a key thing to note here is if something comes out of the due diligence that the private equity fund weren't aware of before, this could impact the price or even jeopardise the deal.
And how can a private equity firm contribute to the value of the business post-deal?
Well, private equity funds have seen many businesses and they've worked with many businesses. And the important thing is through the growth of business, it needs support to ensure the right infrastructure is in place to facilitate the growth. Businesses have many different growth strategies, internationalisation, acquiring competitors, etc. And private equity have helped many businesses execute these strategies, and they can provide strategic advice and even financial support to make sure that the businesses can grow.
Simon, thank you very much for your insight.
Thank you.